like, first, take control of your own assets, because even with a little bit of know-how and picking the right assets, you can outperform picking the indice. And
Yeah.
you know,
Oh,
this is
totally.
probably
Well, hey everyone, welcome into Pushing the Limits. Today, I'm super excited to have Tom Kranzle with me. Tom, welcome to the show. Fantastic to have you. Thank you so much for coming on. Really cool.
Thank you so much for having me, Lisa. It's my pleasure.
Yeah, we've just been riffing everybody. Tom is a wonderful trader, and he teaches people about trading and empowers people to really take the bull by the horns and learn this what many of us think is very complex, and it is, um, in the trading world. But he's also an athlete who loves to get out in the mountains and hike and stuff. And we were just riffing on how the athlete mindset really benefits you in your business life and in your trading and all of that. So, Tom, tell us a little bit of your backstory, and what sports are you into? And you live up in the
Okay.
beautiful mountains, because you sent me a lovely video the other day, and I'm like, oh my God, stunning. Yeah, so tell us a bit about yourself.
Yeah. Yeah. So now we live in the mountains of British Columbia, where we have easy access to climbing and hiking and skiing and trail running and all that. Used to live in the city in Seattle, and now uh, it was just before COVID, actually, that we moved up here, 2 weeks before the world shut down. And
Good
my wife and
times.
I, we had always thought, oh, we're going to retire in the mountains where we're close to the activities we enjoy. And then we said, you know what? Why not do it when we are still young enough to be able to get outside and do that? And
Mm.
also, I mean, just as an anecdote, looking around and I'm generalizing here, but at the older population where we used to live in Seattle compared to our neighbors here, it's night and day. You know, we
Wow.
ski tour with folks in their 70s who are thin as a rail, are still hiking up the hills at faster paces than myself sometimes. And we thought, gosh, as we age, that's what we want to aspire to, as
Yeah.
opposed to some of what we were seeing in the daily grind.
Absolutely, absolutely. And this is the thing, with longevity and anti-aging. You really, if you can keep your body together now, especially like with
Hmm.
all the technology that's coming and all the AI stuff and all of that, if we can hold our bodies together for another decade, then we're going to have ways and means of living longer, much, much longer, and having healthy lifespans. So really, like, it's really important to sort of stay, fit now,
Hmm.
keeping yourself together so that you can enjoy a much longer, healthier life. That's what I'm sort of like aiming for anyway. And you're right, when
Yeah.
you see people living in nature and living that natural lifestyle, they are much fitter, stronger for much, much longer. And it really shows
Yeah.
when you go from the city to the countryside, so to speak. So
Absolutely.
Tom, tell us a little bit about, the other part that is not about
Hmm.
health and hiking and trail running and skiing. Um, Tell us about your trading background. How did you get to become a trader and teach people about trading? So we're talking trading equities and crypto here, and all of the fancy stuff that we got into. And why is it important for you too, while you're telling that story, to
Hmm.
empower others to do this, because it's really a way forward for people. So yeah, tell us your backstory there.
Yeah, I've got a lot to say on that. One thing I just wanted to add on the fitness side is that I've always led an active life. You know, my parents, they taught me to go backpacking and climbing at a young age, so the outdoors were very much involved. But I've seen both sides of it, and this will connect to how I got into trading. But
Hmm.
in my early 20s, I started a film production company producing documentaries and commercials. And that grew to multiple offices, you know, on the West Coast and the East
Wow.
Coast of the US, a bunch of employees. But you get so busy. And in my early 20s, it was like every weekend I was out rock climbing or, you know, surfing in the mornings when I used to live on the coast in California. And then as it got busier and busier and, you know, multiple flights a week and meetings and health just slipped. And by my early 30s, I had terrible sciatica. I was overweight. You know,
Wow.
I had to pull myself out of the car. I had massive back pain. And
Wow.
I was still getting out on the weekends. But then when we made the move up here, I feel like that really saved me to get like I caught it in time. If I would have let it slip throughout my
Yep.
40s into my 50s, it might be much harder to recover. But it just had me realize it's like, okay, chasing success, or these bigger projects or accolades is no good if your health fails. And I didn't see it in the moment, but my quality of life was terrible. My mood, my energy, I couldn't get through an afternoon without taking a nap. And now just, and I'm not as fit as or as disciplined as you, but just regular exercise, watching the nutrition, and it's night and day in the quality of life, the no
Yeah.
more pain, all of that.
Yeah.
So,
It's so
I mean,
crucial
your
because
audience probably knows, but
well, that's what we love talking about because it is about being okay. I'm starting to go on that slippery slide, and that is most people in their 30s and 40s and 50s. They are going on that slide
mhm,
at some rate, and they don't see it until something big happens often, or something hits them in
yeah,
the face. And because we're so busy trying to, our careers and our achievements and our businesses and money and family and all of these things that, parents, all the things that we have to take care of, we can get left on the back burner, and then the slide goes really, really quickly if you're not really watching. And the human body is such that we need to live in a way that our ancestors lived as best as we can
hmm
while enjoying the comforts of our modern life, but not letting the comforts of our modern life completely rule the way, because our human biology still needs to move, needs sunlight, needs to,
hmm
see the sunrise and sunset, and circadian rhythms and all of those bits and pieces that are part of a healthy human being, just get left on the wayside when you're busy working, so it
yeah.
is. And did that lead you then to go, I need to find a way to, make ends meet and live, but stepping back from the production company?
Yeah, and I mean that might be a great way to transition into the backstory a little bit, and then we could talk about why, I got into showing others or teaching others how to trade. Um, and I guess just going on to the responsibility and career part, I think there's also so much pressure today, and this will tie back to Bitcoin and hard assets, but with the cost of living
Yeah.
increasing, not just rents and the cost of housing, but the cost of food, everything else. So there's that external pressure to work, 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 grind, grind, grind to meet, those
Yeah,
obligations.
totally.
And then it's easy to let the health slip by the wayside. But if you maintain that, it'll set you up better for all of these things. But it's a long story, but the abridged version is that my business, I really enjoyed the creative pursuit. I never thought finance or investing was something that I would do, that I would even enjoy, because I love the creative pursuits so much. And the business grew between 2007 when I started it, or late 2006, so right before the GFC.
Hmm.
Generally, it was growing at, about 15 to 25% a year. So gradual expansion. And then COVID happened and
Yeah.
everything shut down.
Yeah.
And film permits weren't even being issued for the first 8 or 9 months in most jurisdictions to go out and do that. And thankfully, in the States, we had this paycheck protection program
Mhm.
that didn't cover everything, but it let you, keep the employees on. Um, but in 2017, I had a lot of friends who were in the tech space and working on SEO kind of stuff, and they were into crypto. And I had dabbled a little bit in 2017 and just traded casually. And then it was 2020, and it was like, well, what am I going to
What
do
am I gonna
now?
do?
There's nothing we can do. And I think a lot of people did get
Uh,
into trading at that time.
or into
Um,
crypto.
and
Yeah.
it had all that time, and it was really an accelerated process of learning through some online education, reading books by W.D. Gann, who's a trader from the 40s and 50s,
Wow.
who I subscribe to,
Okay. Yeah.
um, and really just having that focused time. And then for my particular industry, there was this big backlog in 2021, 2022, where it's like this demand of content. And then it started trickling out again. And I really, in my industry, started seeing the impacts of AI. I mean, this year, for
Mm.
example, in Hollywood, it's 25% less physical production jobs.
Wow.
So, the lighting techs, the hair and makeup,
Yeah,
the
yeah,
people on
yeah.
set, because it's already being displaced by AI generated content.
Wow.
And the projections are by the end of 2026 that that's going to be 40 to 50% less
Holy
jobs.
crap. Wow.
And I don't think my former industry is an outlier. I think
Mm.
there's going to be a massive shift across many industries, and people are. I think we'll be okay as as humans, we'll figure it out. But I do believe there's going to be a period of pain as we
Mm.
adjust. And,
Yeah, I
the
do too.
analogy that maybe folks have mentioned on your podcast in the past, but there was the Industrial Revolution
Yep.
where human muscle was being replaced. Now it's the second Industrial Revolution, but instead of muscle being replaced, it's brain power
Yeah,
being
that's a really good
replaced or augmented.
analogy. Yeah, that it is.
Yeah.
Yeah, the intelligence is coming, and the intelligence is looking like it's might be better than ours. Eventually,
Sometimes
at
more
least.
objective, maybe. I don't know.
Yeah, more objective and more detailed and bigger memory and
Yeah.
and all of that stuff. I still think there's a place, but this transition is going to be rough.
Yeah.
And the printing that's going on, of course, we see, and we've talked on the podcast before about the spiraling debts all around the world, not just in America but
Hmm.
everywhere. The governments are printing money to kick the can down the road. The fiat money system is broken. Broken money. We
Hmm.
have a broken money system created by debt. It's a debt-based system. And that's what led me into the Bitcoin space in 2020, and also the freedom side of Bitcoin, very
Yeah.
much a libertarian in that sense. And the government overreach, the surveillance that's going on, the things, all of that type of stuff made me want to look deeper into what are the ways that we can protect ourselves from if such things should happen in future and get worse. The sort of George Orwell 1984 type prediction sort of fictional novel that's eerily true.
Yeah.
So I got into it for that as from that perspective as well. Also during that crypto, I think a lot of that phase. I think a lot of people, started to rethink their entire life philosophies in that phase. Like, where am I going? What am I doing? Where is this heading? Where is society heading? And each of us has answered that in their own way. But we are living through a time of exponential change, and we don't do really well with exponentials as humans. We like linear progression. We get that.
Hmm.
10-15% growth a year, fine, good. That's all
Yeah.
lovely. But when things start to explode, like AI is exploding exponentially, and what does that actually mean for us? That's when it comes, really difficult. So did you then transition into trading full
Yes.
time, or how did that
Yeah.
happen that
So
you
it
stepped away?
was something I found I really enjoyed.
Mm.
And I didn't think the creative skill set would carry over into trading quite as much as it has. But really, people look at charts and feel a little bit overwhelming.
Yeah, it's
But it's
intimidating.
really just a read on human emotion playing out on the screen. And rather than seeing numbers, we get to see these patterns play out, which are much easier for our mind to recognize and to see kind of what's going on with buy and sell demand. And so that creative skill set mixed with I'm kind of an odd blend where I'm also very structured and organized. And
Yeah,
so I set very strict rules for myself. And maybe that discipline carries over also
yeah,
from some of the sports side. But I found that those two things work really well together. But in terms of the transition, it was slow phasing out where I saw the slowing in my business. I unfortunately, bit by bit, had to let my team go, close offices, and then made this my full-time job between 23 and 24.
wow,
And it's I've really, outside of having to let the team go, that's another story, especially when you're
yeah,
close to them. But I would say I've never, even though it's a challenging job, and I can get into why it's challenging, I've never been happier just in terms of the freedom and the flexibility. And now with the coaching side of things too, if we're talking about terminal or instrumental values, I don't know if you've ever done that exercise. You just ask yourself, like, why do I do this? Why do I do that? And
oh
a
yep,
terminal value is the why. So that would be pursuing happiness or freedom or
mm-hmm.
love or something like that. And then the instrumental value would be the how you get there. So that's maybe pursuing discipline or an education, and that sort of thing. And I found it's like, for me, it's personally the freedom side of things,
Yeah,
both, the self sovereignty, the autonomy, and then also it's the helping others. It's like
yeah,
making money's great and we have obligations and, it makes life easier. But I found a lot of fulfillment from
yeah.
the coaching side and smoothing out the bumps for other people along the way.
Yeah, and super empowering because, I've been, like I said, in this space for like, 5 going on 6 years. And we have a mutual wonderful teacher, James. Shout out to
Mhm.
James of Invest Answers. Wonderful man, very caring, very compassionate, and very, very amazing mathematician. And, like
Mhm.
he's so advanced, it's crazy, but he's been a great guide over the years. And I know you're part of that community as well. And then finding you and finding your channel through DCA, of course. That's how I
Mhm.
originally found you.
Oh,
On
really?
there.
No,
Yeah,
so
yeah,
just a few
yeah.
weeks ago.
Yeah, yeah. But then I dived into your catalog of information and education that you've been putting out.
Mhm.
And I was like, oh wow, like I actually understand what you're saying. And when you were explaining the charts and the because it's been intimidating to me, right? I haven't, I've
Mhm.
been investing but not trading. And when I looked at the charts, I've made a couple of attempts prior, and I've just like gone, oh, I don't know where that, I start losing myself in the jargon. And I know that I have the capacity to do it, but I've also got multiple companies and, mums and, a very busy life. So someone that can break it down into small steps for people and make it manageable, because I do feel like that like being able to invest in the right things with a long-term perspective is great. But you also I have this want, and I know a lot of other people that are in similar positions, that you want to be able to use whatever the market's doing, whether if we're going into a bear
Mhm.
market next year, I don't want to wait 2 years before I make any money. You know what I mean? I want to be able to
Mhm.
trade in any market that's happening, whether that's good, bad, or ugly at the moment. And that's why the trading side of things appeals to me. And your teaching style I found really fantastic. And you've got this wonderful YouTube channel that everybody has to go and subscribe to. Tom, tell them your trading your name on the YouTube channel and X as well.
Yeah.
Yeah.
Yeah, it's Trading Apologist, which is a bit esoteric. Most people don't know the term apologist, but it comes from the world of religion, actually. An apologist is someone who would give reasoned arguments for what
Uh-huh.
they believe is true.
I didn't know
So,
that.
yeah. So it's not someone who's saying sorry all the time, although maybe I do that too much. Um, but I figured, you know what? I'm trying to convince folks that there is value in trading, particularly in a third-year bull run like we're in right now, that's
Yeah.
marked by more volatility.
Mm,
And there are different points in the market where different styles excel. And we can get into that in a moment.
mm,
But,
mm,
basically encouraging folks, you know, to take control of your portfolio. A financial advisor doesn't have your best interest at heart. Their
mm,
number one motivation is to not lose money, which is a very different end goal than wanting to grow a portfolio to maximize returns. And within that spectrum, we also have to be a bit cautious to, not expose ourselves to outsized risk. So, balancing your portfolio, making sure you're not too heavily allocated to the wrong assets, all of that good stuff. Um, but in terms of just convincing people to trade, so it's like first take control of your own assets, because even with a little bit of know-how and picking the right assets, you can outperform picking the indice. And
yeah. Oh,
this has
totally.
probably been
Yeah.
discussed before, but if you're picking the S&P 500, you have like 40 companies that have performed this year,
Yeah. And the
and the
rest are
rest
dead.
that's just dragging you down
Mm,
in
mm,
that
mm.
basket of 500 companies. And this year is very much a stock picker's market. But so it's like that's step one. And then step two, once you feel a little bit more comfortable, then learning to rotate in and out of assets when the sentiment and the overbought and the oversold signals, are flashing. And just in a very simple sense, I always tell people, when your portfolio is up so much that you're so excited that you're always checking your app, that's probably a time wherein you should trim a little bit.
Yep.
And when it's a day like we had last Friday, where things
Yeah.
are down so
I
much
want to
that
get
you're like,
into
I don't even
that.
want to open it, that's probably the kind of day that you should be looking to enter some
To
positions.
enter.
Yeah.
run into the burning building. My husband's a firefighter, and I always
Oh
say,
yeah.
run into the burning building, as James quotes as well. When there's blood on the streets and everything's down, that's when you go in,
Hmm.
not when there's euphoria and your mother-in-law is asking you about Bitcoin. Like I literally had my auntie ring me yesterday and ask me about Bitcoin, and I'm like, oh,
Uh-oh.
might be
That's a
time
bad
to
sign.
might be coming to the end of the bull run shortly. I don't
Uh,
know. But
I don't know if it's true, but I saw someone post on X that Michael Saylor recorded on the Joe Rogan Experience yesterday. I was like, oh no, that's not a good sign if that's true.
we're going mainstream. Every time we go
Yeah.
mainstream, it's time to get out of that train.
Yeah.
And where do you start? Because you have a wonderful Patreon as well that you've
Hmm.
started just very recently,
Hmm.
and I'm going to join that. Where do you start people at when they're real beginners?
Hmm.
Uh, like I've started with spot and shares and Bitcoin mostly, and some alts that I'm sort of regretting after last Friday. There was a big correction in the market for those who don't
Yeah.
know. Where do you start people like? Is it swing trading? Multiple
Hmm.
week swing trades, or is it peer trading, or perps, or the high risky perps, or is
Yeah.
it
No, probably not.
leverage?
Perhaps,
No.
yeah.
Where do you start if you're
Yeah.
like don't know any of this terminology that I've just thrown at you?
Hmm.
Where would you recommend people start, and like just learning the charts, to read the charts first and then
Yeah,
taking
I would
small
say that
bets?
that's a great place to start. Well, first identifying the right assets is number one. And
Mm-hmm.
then the easiest type of trading is just buying and selling spot or the straight share. So spot, for people who don't know, that's what they call buying crypto, right?
Yeah.
Without leverage. Then it would be pair trading. So swapping, one asset to another. And as James always says, everything is a
Is a
pair in
pair.
trading. You don't have to think in
Yeah.
US dollars. And even to assets more broadly, real estate might see some hiccups over the next couple of years.
Yeah.
And
GAN,
if,
WD GAN.
yeah,
We're
yeah,
heading towards
yeah,
the end of that
18.6
cycle.
year real
Yeah,
estate
yeah.
cycle. Yeah,
I'd love to talk to you about that actually at some point,
sure.
because
We
I'm
can.
trying to marry that with the current new AI system and how does that work?
Mhm.
Because we've got some different market structure and AI and things like that happening in that thing. But let's park that for a little bit further down the track.
Yeah, absolutely. Yeah, and I have some friends who are very into real estate with a bunch of rental
Mm,
properties, and they've been already unloading some of their,
yeah,
C grade properties, so the ones that are deferred maintenance in a worse neighborhood, um, that kind of thing, with the thought that's going to do better in markets for the next 18 to 24 months. And then if we see a correction in real estate, you don't have to stay in markets. If there's an opportunity like we saw in 2008, that could be a wonderful time to think about real estate as another hard asset,
yeah.
with a little different strategy. But going back to the trading, so there's buying and selling just the shares.
Hmm.
Then you can pair trade, which means just flipping one asset, sorry, microphone, to
It's all
another.
good. Yep.
And, I don't know if you get this detail, but we could show the audience a chart how you do that. You can, in TradingView, which is the software we use for charting,
Yeah, we
you
can
just
share.
do
We
one
Yeah.
asset divided by another, and then you can switch on those swings. And then beyond that, then there would be getting into playing with options, which is a little more tricky. And then there's a large chasm before we get into perp trading, which is what you mentioned,
Yeah.
which is playing with leverage on crypto. And that's
Extremely
excessively risky, and
dangerous.
I would say
Yeah.
people shouldn't do that right away.
No.
But in the Patreon, I post a lot of educational content to first get people comfortable reading the charts, using a bit of technical analysis, and then I'm posting trade alerts. We do a call every Sunday to go over, okay, what are the opportunities in the market? What are we looking out for? What are we expecting for the path forward? To really, help them kind of bring all that together. And then it all depends on the lifestyle and availability of each person as well. Because some folks really are already doing this full time and they want to be trading more actively. So they might be trading more volatile stocks that they can get into and out of over a few days to a couple weeks. And then other people just want to look at it occasionally. So right now, something like Amazon's at a very good value zone, and it's
Hmm.
not going to spike, by crazy percentage points overnight, but it is something safe to be layering into that is probably going to be worth more in 24 months or 12 months even than it is right now.
Hmm.
Just, yeah, if you look at the PE ratio and all that.
Yeah, yeah, yeah. And that's really interesting because, that's probably where I'm at the moment for learning from you is I'm just focusing on learning the charts and learning to set my trading view up correctly. Trading view, for those who don't know, is a really
Mhm.
is a platform where you can read all the charts and have everything, all the indicators and
Mhm.
everything that you can put in there to work out technical analysis, which is what we're talking about here, because you need to be able to read the charts. But also, Tom, how do you pair the technical analysis part with the
Mhm.
fundamentals of the companies that you're looking at? And what do you look
Mhm.
for in fundamentals when you're looking at a company's,
Sure.
potential?
Yeah, and I would say it's really different depending on whether it's a longer term investment or whether it's a trade. Because longer term investments, you want to look at the fundamentals. You want to make
Hmm.
sure they have a strong balance sheet, all these things are in place because markets can be volatile and we can have
Hmm.
red days like last Friday, or as you can see by the tickers behind me, as we had today
Yeah.
in the
Yep.
US, we had another mini crisis in regional banks. So
Mm.
that mixed with, I guess, muted results or disappointing results from some of the semiconductor players like TSM today led to the
Uh-huh.
sell-off. But so you want the fundamentals to be in line for your longer term holds.
Yep.
So you, as an investor as well, that you can emotionally weather the storm because there are going to be drawdowns and market cycles and all of that. Now, with trading, I don't care about fundamentals quite as much. And this is where James and I differ a little bit because James, he really does a wonderful job of analyzing the fundamentals and
Hmm.
picking the winners, out of this basket of possible
Yep.
options. But there are certain sectors that run on hype and momentum, and
Yep.
we've seen that in semiconductors, in the quantum computing space,
Hmm.
where some of the quantum computing stocks this year have run over 4,000%.
Wow.
And
I
none of
missed
those
that.
companies are profitable right now.
Wow.
And most of them won't make it to 2030, and a couple of them will. But because there's all this hype in the sector, I'm
Hmm.
okay seeing the
Playing that
capital
game.
rotation and saying, okay,
Yep.
I'm going to jump on this. Just being aware that this isn't a long-term hold. I'm riding it for a few weeks, and
Yep.
then I'm watching it closely for the appropriate time to get out. And fundamental analysis is one thing, but I always say that ultimately the truth is in the charts.
Yep.
And, you know, um, James, for his part, his fundamental analysis is great, but sometimes he sees things so early
Yeah,
that
I've
you have
noticed
to
that.
invest and then wait,
Hold two
a
years
couple of
before you,
years for
yeah.
everybody else to catch on with the thesis.
Hmm. Hmm.
Whereas the truth is in the charts means, yes, the fundamentals for this asset are wonderful,
Yeah.
but the truth in terms of the money flow, where people are actually parking their capital, is not showing through yet.
Yeah.
So
Because
for the
people
trades, it's
aren't that far
really,
ahead. Yeah.
yeah,
Yeah.
for the trades, it's really about identifying that
So
and
it's more
seeing.
current versus
Mhm.
what's, like let's take a Solana, for example, which is one of the
Mhm.
major altcoins in the crypto space that
Yeah.
James has been talking about Solana for years and he's done really, really well because he got on really, really early. But when the point that I've got it and it hasn't done so well, right,
Mhm.
comparatively, even though the fundamentals you would say like this is absolutely killing it, but it's not showing in the valuation of the stock,
Mhm.
and it hasn't. And other stocks have done better, or Bitcoin's done better. And I don't think it's because James was wrong. I think it's because he was ahead of his time and the
Mhm.
people haven't caught on to the fundamentals of Solana and how amazing how much assets under management are and how many transactions and what's been done on the chain and what's been built on the chain and all those fundamental that composite score that he has for all the alts. But the people are not so advanced. I've actually noticed this, Tom, in the health world, right? Because I've obviously been in the health and the performance space for a long time. And I'm like, I used to have a TV show and I was talking, this is like 12, 13 years ago. And we were talking about keto and low carb and high fats,
Hmm.
like all this
You
stuff
were
back
way ahead
then.
of the
We were
time.
too
Yeah.
far ahead. The producer canned
Yeah.
the show in the second season
Hmm.
because he said, this is absolute rubbish. You're talking rubbish. And then the producer, so they canned the show because they were not up on the latest. Right. And then a
Hmm.
couple of years later, the producer rings me and says, I have to apologize. I was completely wrong. You were right. Like we were just ahead of the thing. And I've always been
Hmm.
ahead on the, like with longevity and stuff. Like, my mum's story is people say in the medical world it's a miracle. No, it's not a miracle. It's the current research. It's the current
Hmm.
stuff, and it's not there. But people are just stuck back 20 years ago doing the same thing
Yeah.
that they were, and so there's a little bit of that, isn't there? And so you're saying the
Hmm.
charts are actually showing in real time right now uh,
Hmm.
what's actually going, and you're playing that, reading that right
Hmm.
now. So do you have your long-term bags, say your Bitcoin and
Hmm.
whatever else you're in, maybe, some good stocks that you have picked as your long-term plays, and then have a portion of your portfolio where you're actively trading
Yeah.
that? Yeah. So how do you sort of
Yeah, and that
do that?
that changes over time, and I think this is a good if the audience is thinking about this. This is you can just use my own journey as an example, but there are different seasons in trading where different styles outperform. And generally
Right.
speaking, I would say the longer term investments do better because they benefit of compounding over time. They don't get shaken out by the short term volatility. They cut us out, the human element that might make
Hmm.
mistakes in trades. So they generally outperform. And then there are also periods in the market where the old saying cash is king is true. So if you look back over the last 25 years, there are 5 of those last 25 years where cash has outperformed the S&P 500, where you would
Wow.
have been better off just sitting in cash. So
Wow.
roughly, well, exactly 20% of the time.
Mm.
So you do have to be conscious of that. But then out of that remaining 80% of the time, I think you could break it down again into an 80-20 split and say 80% of the time, you're probably better off having high conviction, picking the right assets, and letting that compound over time. But again, keeping a small basket. I think it was Paul Tudor Jones. No, it was.
Hmm.
I'm going to remember who it is, but famous investor who said everybody says don't keep your eggs in one basket. He said I've always had a small basket, but I watch it very closely. Meaning that same thing. It's important to be in the right assets, maybe a little bit of diversification across sectors, but not so diversified that you're getting
Yeah.
weighed
So
down by all the
index
losers.
is not so great. Yeah.
Yeah, and then also identifying for trading what sectors have momentum right now. So for my portfolio, it's fintech, it's AI, dabbling a little bit in the quantum space. Um, obviously tech is still outperforming. Oh, I'm trying to
Mm.
think what, and actually there's been a rotation back into healthcare, which is interesting. Not
Wow.
biotech, but healthcare, which is sometimes a sign of later cycle markets.
Oh,
Um,
wow.
but what
Mm.
I just want to mention on the trading front. So 2022, we had a bear market. And so when there's a bear market, you're getting a little bit more defensive. So healthcare,
Mm.
consumer staples, maybe even there's an ETF called SQQQ, which shorts the NASDAQ, which is very tech heavy. So you can do that to be more defensive, or you could sit in cash. And at the end of a bear market, that's the time to look for value. So you're saying,
Yeah.
okay, what companies are fundamentally strong? But are really beat up on their price, and you get in that buy and hold position. So 23 and 24, I was 80% long-term hold and then 20% trading just to take advantage of some opportunities because there are always things that go counter trend, like we're seeing with metals right now that are running
Yeah.
on their own cycle. They've been
Silver
in a
and
bear market the
gold.
last
Yeah.
couple of years and now are hitting, I guess, that 2022 point that tech hit, a couple of years ago. Um, but then this year, as we're getting into a third year bull run, if you look back in history, anytime there have been two 20% plus years on the S&P 500, that third year is normally marked by a lot more volatility, which we've
Hmm.
seen this year. I didn't know we would get as much volatility as we had in April with tariffs. But then in the US, I don't know if you heard, but we also had Trump come back into the White House.
Yep.
And if you look at Trump
Yep.
1.0,
Yeah.
there was a lot more volatility.
Yeah.
And that's not even meant to be a political statement. It's just a statement on the style of leadership. Markets like
Hmm.
certainty,
Hmm.
and that administration throws a lot of ideas out there.
Yeah.
Sometimes just on, Truth Social or on X, and they see what, it's like throwing the spaghetti at the wall and seeing what sticks.
Yep.
Markets don't like that.
Hmm.
So that had me thinking, okay, part of my plan was with like the crypto cycle, which traditionally has run 4 years. We'll see if that continues.
Yeah.
Was to sell some assets at the end of 2025. I thought,
Hmm.
well, with things pointing to more volatility, why don't I sell those at the beginning? I'm already over the long-term capital gains tax threshold and free up some more of my portfolio to trade and work around these swings. So this year it's been 40% still long-term hold, 60% trading.
Wow.
But if the
But
market
then
cycle
you're very
changes
good.
and we
Yep.
clearly see we're going into a correction, then it would be
You'll get
get more
more defensive.
defensive and then look for the opportunities again, 12 to 24 months down the line, depending on how long the correction runs.
And if you're a beginner, you probably would have, 60% in trading and only 40% in long-term holds. It would probably be, a bit more conservative from the get-go.
Yeah, I would say so. Yeah.
Yeah, just
Yeah.
so you work and take a small portion. That's what I'm planning to do. You've also got to look at your
Hmm.
tax jurisdiction and what your tax
Absolutely. Yeah.
implications. And that's been a thing that's been a bit of a hold up for me too. While I try to work out what exactly and how do I separate my long-term holdings so that they don't get impacted by the trading that I want to do over here, right?
Hmm.
And especially when it comes to crypto, because like in New Zealand, there's not a heck of a lot of accountants. There are a few, but there's not a heck of a lot of accountants that have got their head around the crypto space at all.
Hmm.
And so the accounting of it can be quite complex
Hmm.
and difficult to do it right. And you want to do it right. You don't want to do it wrong, but nobody's giving you guidance on how to do it right, which is really fun.
Hmm.
It's every accountant's got a different opinion at the moment. Is what I'm finding. So you've got to work out your tax jurisdiction, what is
Yeah.
allowed, and in America you've also got like tax-free IRAs where you can trade as much as you like, and we don't have that
Hmm.
advantage over here, unfortunately,
Oh, that's
which would be really
too bad. You don't have
tragic.
like a super fund like they have in the UK or maybe it's
No.
Australia that they have those.
No, no. At least and if anyone knows out there that one that is, please let me know because I might be wrong. But no, we have most of our super funds are completely controlled, and only recently have they opened up that we can have any control over what we're investing in. And to me, that's like it's been gold this year. One of the platforms here, Sharesies, has opened it up so that we can have 50, we have to have 50% in the S&P if we're doing it, and then 50% of stocks that we can pick. But it's still not, a free that I can trade in and out of and take advantage of that. And you still don't have complete control. And, as an investor now, I want to have control over my portfolio. So, I've stopped putting into things like that. Um,
Hmm.
but there's money that's stuck in there, right? Which is a bit,
Yeah.
so just coming back to the reading of the charts and
Hmm.
how do you start? Like, what are the indicators that are you using most commonly? Like I've seen, you're using the VRVP and the
Hmm.
RSI a lot, and your support and resistance lines. Can you explain some of those terminology to people and or
Sure. Yeah.
what's it, where should they be like set up a TradingView account for a start?
Yeah. Yes.
You know.
Let me just, is it okay if I screen
Yeah,
share for
share.
this
Go
one?
for it. Yep.
Okay.
And if you're on the podcast, make sure you head over to the YouTube channel and watch it on there.
Okay. So this is TradingView software here. I'm just going to move it up to my upper monitor so my eye line's good. And here we're looking at Solana, which is one that you were talking about. And I've got all
Hmm.
these lines going on, which I should probably delete. But let's turn them off just to clean things up for folks. But these are the things I normally trade with,
Hmm.
which is mean reversion, which is down here.
Hmm.
RSI, the relative strength index, and these are RSI is a momentum indicator. So it's indicating momentum based on buy pressure to the upside and then sell pressure to the downside. So when you get above this line here, above 70, you're overbought. usually corresponding to a point where things are going to cool off. And then when
Mm-hmm.
you get to the bottom end, then things are oversold. And then mean reversion is just how far the asset has deviated from the mean of the trading range, which here would be at zero, right in the middle. And you can
Mm-hmm.
see it just takes these very predictable swings back and forth. And so, what I'm really looking for, and this is probably an oversimplification, and we'll look at this maybe on the 4 hour chart because we'll get a few more signals. Um,
So
let me
explain the
bring this
four
up.
hour versus like
Yep.
the different
So,
hourly, 1 day,
so,
1 week.
yep. Yeah, so the chart I just had was the daily chart. So each little candle up here would have represented 1 day of trading.
Mm-hmm.
And now we're on the 4 hour, which each candle represents 4 hours of trading. So you have that breakdown into your 24-hour day there. And let me just make these small so folks can see it. But really, uh, and this is too much for a lot of people to look at this, but if I'm getting RSI oversold below 30, mean
Yep.
reversion dots, that's a great
Mm-hmm.
entry point. If
Mm-hmm.
it's oversold, like it, or I'm sorry, overbought, like it was back here,
Yep.
that's telling me to exit, telling me to get in, telling
Yeah.
me
Wow.
to exit, telling me to get in again last Friday.
Yeah.
So
Simple. It can be as simple as that.
it
I
can be,
mean,
but it can be
it looks
even
confusing,
simpler
but it's
because yeah, there's a lot of lines going on. But you don't have to use all of these. If someone is just getting started, honestly, the easiest thing I tell people to do is just to download the optimized trend indicator from
mm-hmm.
James,
Mm-hmm. Mm-hmm.
which it's just I don't know how he programmed this, but I read price action a lot to determine when a trend has flipped bullish, moving in the upward direction, or bearish, moving in the downward direction. In an instance like this, I would look at the price action. Imagine these blue and red, orange lines weren't here.
Mm-hmm.
And I would say, okay, we've made a lower high. And as soon as we break below these lows, we're making a lower low. So I have to
Mm-hmm.
assume the trend is turning down. This
Yep.
indicator nailed the flip. Let me just turn the opacity up so the audience can see it a little better.
But do make
Somehow
sure you go
this,
to the YouTube channel, guys, and watch this. Mhm.
yeah, somehow this nailed the trend flip up here already,
Yep.
which would have been at $240 on Solana. I wouldn't have identified the trend flip just based on the price action until $234. So
Ah,
it's really quite remarkable. I mean, you're
but
not nailing the
the
top.
but James's optimized trend model
Mhm.
did pick it up earlier.
Did pick it up earlier. Yeah. So
Wow.
really, it's just trading based on, it's very binary.
Mm-hmm.
Um, and it's just based on the flip to blue for an uptrend or flip to orange for a downtrend. And depending on the asset you're trading, you might want to change the time frame because you can see in periods like this, there's a lot of swapping back and forth.
Mm-hmm.
So maybe the 4 hour isn't the best to trade, and you want to slow down things and go to the daily, which is much more predictable. And here you're in a trade for about 6 weeks, then you're in a trade for about a month, and then for another month, then about a week period, and then for another 5 weeks to the upside. So very reliable.
That's a very,
Just
very simple way of just swing trading
yes, exactly.
without getting, and you can get a lot more fancier than that, but that's a really good
Yeah.
place for people to start. The RSI and the optimized trend, which you have to buy the optimized trend model from James. Yeah.
hmm Yeah.
Mm-hmm.
So, trading doesn't have to be overly complicated. Um, and right now, say for the period we're in right now, this particular asset has an underside support that we've been holding since April. And you can see how that's held up, and we just bounced from it last Friday.
Mm-hmm.
So we have that
So
underside
overall,
support.
it's in an uptrend. Over a longer
It's
time period, it's still
over
in
a
an
longer
uptrend.
time
It
period.
hasn't broken
Mhm.
that key support level even on the Friday when
Yes,
we got the big
exactly.
drop. Yeah, which is
Even
pretty
though
important.
we're Yeah, even though we're in a local downtrend right here.
Yeah.
But so my simple statement is if we break this underside support, then I sell some of my assets or I hedge and get a little bit more defensive. And if we break this overhead resistance, then I'm assuming we're going to start recovering and I'm looking to the upside. It's just one of two scenarios and reacting to either one of those.
Wow. Yeah, so it can be that simple. And then you can add on other indicators to get more confluence between things to check that, yep, we really
Yes.
are. Yeah. And that's where you're getting, but that's a very simple way of showing that how simple it can be. And if you're
Hmm.
doing something like a pair trade, which is what I'm trying to work on at the moment, is the Tesla to MicroStrategy pair trade. Then you would be having you would pick the MicroStrategy to Tesla pair, and you'd see how they compare.
Hmm.
And then you're just trading in and out of those two assets. And what I find good about that pair, and that was a tip from Motbot, that interview that you did with Motbot, who hopefully I'm
Hmm.
going to interview later in the year or early
Oh,
next
she's
year.
great.
Yeah, she's amazing. Um, you those are both stocks that I'm happy to hold for a longer period of time anyway. So my
Hmm.
thought was, well, if I stuff it up, hopefully I won't stuff it up too bad because I'll be in two assets that I believe in anyhow, so to speak.
Yeah,
Yeah.
absolutely. Yeah. And here's that chart just on the daily time frame. So you're comparing one stock, MicroStrategy, versus Tesla. So
Mm-hmm.
it's the same theory. When you're in the blue trend, you want to be in MicroStrategy. When you're in the orange, you want to be in Tesla. I don't normally trade this one on the daily time frame because it doesn't get too close to the price action. I normally
Mm-hmm.
go with the 4 hour time frame for this one. Um,
Mm-hmm.
but you can see for the last, I mean, since July,
You want to be in
you've
Tesla.
generally wanted to be, yeah, in Tesla. And you can do this with any asset, really. But one last thing I just want to mention for the audience, if they don't want to take actions that often, going back to Solana that we were just looking at, you can pick the time frame that works for you. So we were looking at this on the daily at one point, but you can go to the weekly time frame where each candle represents 1 week of price action.
Mm-hmm.
And then you can really see that, I mean, you've
So the
taken
really
one, two,
long-term
three.
trends. You're looking at the longer
Yeah,
term.
you've taken maybe 4 trades this year.
Wow.
So
And that's
lots
just
of
one.
options.
Yeah, yeah, yeah.
Yeah. And
Wow.
and one thing
So
I
you
always
don't have
encourage
to
people,
be on the minute, perping and doing leverage in order to be a trader. You
no.
and you can do this as a part-time thing while you build your confidence and build your knowledge base up, and still have some wins, and maybe start
Yeah.
paper trading first. Paper trading means that you're not actually doing it live. You're just testing your hypotheses and your skills with an artificial portfolio amount of money that's
Hmm.
given to you to play with, but isn't real. That's a really good way to get started too, isn't it, Tom? Just to, you
Yeah,
know.
absolutely. And I could just, if folks do end up downloading TradingView,
Hmm.
and we just go back to this real quick. Let's see, what time frame are we on now? Let's go back to, say, the 4 hour for Solana.
Hmm.
I should have erased some of these lines before we got started, but that's okay. So just trading off what I was talking about with the mean reversion signals and RSI matching up, you just
Hmm.
hit replay right here, start new session, and you drag this back in time. And if people practice, I always tell them go like 2 years back in time so you're not familiar with
Yep.
the current price action. But imagine we're starting here and let's just hit buy to say we have 100 uh, tokens in our portfolio. You just hit the play button and it goes forward in time. And then we're just watching these and we're like, oh shoot, I'm getting a signal. I should probably sell around this point here because it's really
Hmm.
spiked up. And then you can just go through and you can practice and you can say, am I learning to read the charts appropriately? And oh, we got another little top there, but we're getting a bearish divergence. Oh, we got another signal. And I was a little slow to hit stop there. We should have gotten it right here,
Yeah,
but
right.
same thing. And so they
Wow.
can just go through and do this and
Hmm.
see, okay, am I at least 60% accurate? Because you need to be at least 60% accurate. And
Hmm.
now, well, we're cheating because we have our lines. We know there's resistance there, but you're getting the same signal, so sell. Um, but it's a no
A good
cost
way
way
to
to say,
test. Yeah.
yeah, am I reading the things appropriately? Am I getting at least that 60% win rate, ideally 70 to 80, um, to really go apply this? And, I guess it goes back to maybe not what we do in terms of solo endurance sports, but you're not going to go out on the soccer pitch without having practiced or on the baseball field,
Exactly.
without
Yeah.
having taken a few swings.
Yeah.
And,
Or run a
some
marathon
people
before
don't
you've run a 5K.
train.
Yeah, maybe not.
Yeah, exactly.
Yeah, take a few swings at things before you have a go for real, and then use a small portion of your portfolio to practice with,
Hmm.
to get more and more confident. But this is
Yeah.
this is doable, Tom. Like, this is not something pipe
Hmm.
dream. Well, what about the AI and the bots and the bot trading, and people talking about,
Yeah.
well, this is all going to be impossible for the average person to do anymore because the bots are going to, AI. I heard yesterday AI is taking the volatility out of everything. I'm like, oh wow, that's a
Mhm.
new concept. Um, yeah,
Yeah.
what's your take on all that? The bots coming in and taking
I,
your lunch.
I mean, high frequency trading bots have been around for a while. They're
Mhm.
going to get better and are probably going to spot these opportunities more readily in real time. The
Mhm.
things that they aren't thinking about, so the pair trade that we just talked about, just swapping between two positively correlated assets when one is undervalued and the other is overvalued. That's taking another step in the direction of complexity that they can't do,
Wow.
or probably aren't thinking about. They're most likely looking at just overbought, oversold conditions on individual assets, and that high frequency trading is what cuts out some of the volatility.
Hmm.
So yes, they might cut into that, but pair trading, James from Invest Answers also has the rotation model where it's doing the pair trade, but comparing five assets essentially that you can rotate between. And I suspect our job as traders is going to be less focused on the shorter term trades moving forward, but still having that conviction. And this comes back to creativity a little bit, that ability to envision what is going to happen in the future and where the demand is going to be. And
The,
in
the bots
hindsight, it
can't do that
sounds,
yet, can they?
yeah,
The
in
AI
hindsight,
can't
it
do
sounds
that.
so simple.
Yeah.
But if you look back to COVID, and you would have just thought about everybody being stuck at home. It's like, well, of course, the Pelotons of the world, the food delivery services, like those kinds of things did well. Um, so, one play for me right now is I've been scaling into a company called Unity Software. And
Hmm.
this is not a world I'm really involved in at all,
Hmm.
but they produce a lot of the render engines for video games.
Oh wow.
And they have very advanced AI technology. So when you play a video game, these NPCs, non-playable characters, they can respond in a way that feels much more interactive. And they've already been tapped by Netflix and some other players to produce AI generated content. And so I'm just thinking down the road, okay,
Yeah.
people's jobs are getting displaced by AI. They're
Mm.
going to need more entertainment. The movie industry is getting disrupted. Uh, Content there is being generated by AI, but the studios in a traditional sense aren't set up to do that. So a play like that, I'm thinking, okay, there's going to be this new world of entertainment. Maybe it's kind of like cinema. Perhaps it's a blended thing where it's a bit more interactive, and they're perfectly positioned to do that. So this is, thinking out to 2030 or so, where I don't know if you watch much TV. I don't really have time for it myself. But Lisa, you would come home and your system would know that you have 30 minutes. This is the kind of narrative you like, and it will just generate something specifically for
Wow.
you. So
Wow.
that's a bit of a long shot. People shouldn't take that as investment advice, but it's
No,
just the example of like thinking through
thinking what's coming.
where things could land years down the
Yeah.
road.
I mean, I've been looking into things like rare earths and trying to get
Yeah.
exposure to rare earths or the energy sector in America, because I know that
Hmm.
the big build outs and the lack of energy that you guys are facing over there, with the demand from AI
God, we're
and the
so behind.
LLMs so behind. So, like, trying to pick the right things and then using the AI to tell me and analyze the picks that I'm looking at, the stocks that I'm looking at,
Hmm.
and comparing those, and then trying to I listen a lot to Jordi Visser, who's just a
Hmm.
fabulous guy to follow on the macro side of things, and how he teaches a little bit about how he uses the LLMs to simplify his research and pull things together. And I mean, there's so many ways to quasi make money in
Yes.
this world at the moment, where things are changing so fast. And what's exciting to me is also that retail, the little guys like you and me
Hmm.
are out, front running the institutions in a lot of these things. And
Yeah.
certainly in things like Bitcoin, we've been front running the institutions for a longer period of time, and they're starting to now come into the space. So it's an advantage for the little guy right now. I feel like for the first time in history, it's not that you need to have be a Wall Street veteran of 30 years to actually
Hmm.
get. In fact, a lot of those guys, it's a bit again like going back to the medical model. If you've gone to medical school, sometimes you've got the blinkers on as to what's actually happening over here,
Yeah.
and sometimes the arrogance of thinking that you know it all
Hmm.
and you guys are idiots because you didn't go to medical school. It's a little bit like that with Wall Street as well, like um,
Yeah.
they've
Traditional
got
way
the
of doing
blinkers.
things.
This is how it's always been. This is what it will do because that's how it's always been. But we're living in a very, very different time, and retailers picking things up quicker now.
Yeah, yeah. Total aside, but I saw an
Yeah.
article last week from the States that doctors were frustrated that more and more patients were asking about the root causes of underlying issues as opposed to just going with the treatment. It's like,
That's
should be
good. We're
happy that
finally
they're,
having the breakthroughs then. That's that's
yeah,
uh that's gold because look, the band-aid approach is not working, and the just drugs only approach is not, it's
yeah,
not the full picture. Like it's great, but it's not the full picture. And when people
yeah,
are pushing back like that, that means you have to up your game. Now, as a clinician, I get the same thing. I get people coming back at me with their research that they've done. And that's great because I learn from them and it's a co-learning experience. So always
hmm,
have humility in whatever you are an expert in. Currently, you can still learn from others and you can still keep an open
hmm,
mind to the change in market structure and the markets and
yeah,
what's
yeah,
happening and if you keep that humility, then I think you're much more open-minded to seeing things from somebody else's perspective rather than your
hmm,
own echo chamber that we all tend to get into, right? We watch the same
yeah,
channels and we do the same things and we think we know it all, but I find it really refreshing to look at somebody else's completely different way of looking things or paradigm and then go, never thought of it like that and don't agree
yeah,
with it, but maybe I can take this away from that. And I think if we all did that, we probably live in a better world.
yeah,
We're not right all the time. That's for sure. And as a trader, you'd know that. Like you said, you've just got to
yeah,
get
yeah.
to
And
60%.
yeah, and you hit on something very important that I tell people, particularly in my TA classes, because technical analysis, we look for chart patterns and we set up price targets. So when certain levels get broken, you can kind of tell where the price is going to go over X period of time.
Hmm.
And having a thesis like that is important to give you conviction in a trade, but
Mm.
you also have to hold your ideas loosely because people get really hurt when they have this thesis and they're so proud of it. And maybe it plays out for a bit and then the chart does something different. It's like you have to adapt quickly with humility and say, okay, I was wrong, and try to adapt and change your positioning.
Yeah, without
The
losing
traders I
your.
see that get really
Yeah,
hurt, they hold to their thesis dogmatically
yeah.
while the charts are telling them for weeks or months something completely to the opposite.
Or years even.
Yeah. Yeah.
Like where people just have a way of doing things or they live on their track record. Like
Hmm.
if you look at Berkshire Hathaway, good example.
Hmm.
Huge. I mean, obviously Warren Buffett was the greatest investor of all time and did amazing and incredible, but what they're doing now, it's not, and now he's
Yeah.
stepped
And he
down. They're not,
missed,
they're
I
not,
mean, I
they're
think he
missing
said
the
himself
boat.
he missed Amazon and Apple
Yeah.
and all of
Yeah, so
those.
not
Yeah.
always right, and just
Hmm.
again, the Bitcoin is here and crypto is here and the world has changed and you've got
Hmm.
new administrations and you've got to change with that. What do you say? I saw a funny meme on X this morning. It was, made up Trump holding up two signs saying your TA will never match my tweets. And I thought that was gold,
Yeah.
after what we just went through
Yeah.
last
Yeah.
week. For those who don't know, the China,
Mm.
there was a Truth Social or tweet or whatever came from Trump that he was putting on 100% tariffs on China, and there was kicked off a
The cooking oil.
yeah, and the cooking oil stuff and soybean farmers and
Hmm.
etc. And there was a massive liquidation in the market And
Hmm.
crypto got hit really, really bad. The altcoins got
Hmm.
really smashed to smithereens. What's your
Yeah.
take on that? And how much was manipulation? How much was
Hmm.
already showing in the cards, and then they used that Trump situation that caused a drop in the market to
There,
cascade it down and
yeah.
liquidate
So
everything.
there is some market maker stuff going on, but technically it's probably more than we want to get into. There were kind of two factors at play.
Mm-hmm.
And uh, for your audience who doesn't know, in the world of crypto, when we talk about perp trading, people are betting with leverage on the price to go up or down.
Yeah,
So,
which is
say
very
if
dangerous.
X coin is at $100 and I'm putting a $10,000 bet with 10x leverage that it's going to go up. Well, for every dollar it drops, I'm losing $1,000. And if it drops to 90, it means I'm
Wow.
completely liquidated and my $10,000 position now belongs to the exchange. So there's a massive incentive for them to, when they see these, people who are going 50 or 100x on their leverage, to push the price around to try to wipe those players out. So that's why we say don't perp trade
Yeah,
unless you really know what you're doing. And if you do it, do it with very low leverage.
yeah.
So you can't get hunted. But so there was some of that going on. But then this big exchange in the crypto world, Binance, where
Mm.
80% of other exchanges peg their crypto prices to the
Too
oracles
much.
that are determining the
Yeah.
pricing. Their Binance basically had a depegging event with their oracles that was then sending incorrect pricing information. And then if the computers aren't putting any bid in, it's really easy for an asset to drop just with a little bit of selling. Um, so without getting too into the weeds, basically the system failed because of
Yeah.
how volatile the event was. And people who had stops in place, the price was
They
just
still
jumping
got
from
liquidated.
$100 to $70, and it was just missing their stops entirely.
Yeah.
Or
That was
I had
crazy.
a I had a position on this exchange called BitUnex
Hmm.
where for 45 minutes I had no control over my trade. It
Wow.
wasn't showing up on the chart. I could still see my wallet balance dropping, but it was a major, cluster for lack
Yeah,
of a
yeah,
better
yeah,
term
yeah. Yeah,
in the
yeah.
crypto world. And I think we're seeing some of that hangover now where a lot of retail players got really hurt,
Mm.
and it takes time to come back from something like that and for confidence to come back in. So,
Yeah.
I would
And
say,
don't perp unless you're a real expert. Don't
yeah.
perp. And don't
And
do
stick to the
leverage that high.
major
Yeah.
players like,
Yeah.
Bitcoin and maybe a couple of the layer one alts, but
Hmm.
some of the altcoins, dropped 80 to 90%
Yeah,
on Friday.
Cosmos,
And
like Atom Cosmos went
yeah,
down to zero. Like for a minute there, it was at zero. We had some
yeah. And
from,
and that was a
from the
factor
last
of that
cycle.
just,
Yeah.
yeah, no bids coming through
Yeah.
on the automated system. So that's just
So there
where
was
it
a
went.
systemic problem as well as market manipulation by the big players,
Hmm. And timing.
and the tweet that went out that
Yeah, so the
started
whole
it.
tweet came out right after the US markets closed,
Yeah.
which is going into a weekend. It's the most illiquid time. So it
Yeah.
was like the worst time for those news to come out. So all of those factors coming
So
together.
crypto got especially hurt. What do you think is going to happen in the alt space in general off the back of that?
Hmm.
Is it too early to tell? Because it really did take a massive hit, not Bitcoin so much because
Hmm.
we know no, Bitcoin went down, but it's come back and it's different. It's the
Yeah.
mothership, as I like to call it. But and it's sort of pristine and, like it's just different. Um, the alts, so my sort of take on playing too much with the alts is now rattled a little bit.
Hmm.
Alt
Yeah.
season, don't know if that's going to happen. Whether that time in the alt season where the alternative cryptos, they're called alts, start ripping was usually what
Hmm.
a lot of us sort of have been waiting for the last couple of or 6 months. And it hasn't happened,
Yeah.
hasn't happened. Do you think that event really might cut that off at the knees completely?
I mean, we might see something if this is a big if crypto gets another, blow off euphoric top end to the
Yeah.
market. The move up has been much more measured this bull run in terms of if you look at the Bitcoin chart in past bull markets, it's kind of gone vertical and
Mm,
it's just been gradually stair-stepping its way up, which is actually
mm,
very constructive for
mm.
market
A
structure.
healthy market. Yep.
Yeah. And the drawdowns have been much less on Bitcoin. In cycles past, you'd see 50, 70% pullbacks. This cycle, most of them have been in the 20% range. There have been a couple that have gone up to 30%. But because of that, there isn't the same excitement and people aren't coming into alts as readily. Also, there are so many of them now,
Yeah,
where
dilution.
that are being minted every day. So
Mm.
capital is dispersed. And the stock market has also been performing so well, like we were talking about with the quantum space moving 4,000% this year. It's like, why do you need to chase a 10x altcoin when there are these opportunities in markets that actually have a company behind them, and it's not just, I,
Mm.
I guess,
Yeah.
hype.
Yeah,
That's
hype
all
and
you're trading
trend
in
and
the altcoin
narrative.
space. Yeah.
Yeah, 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 yeah.
Yeah.
Yeah, so it'll be interesting to see how it comes out of this. And, a lot of people unfortunately got hurt last week. Just
Yeah.
coming back to another topic like the VIX, like, do you see a lot of volatility coming? Like, we are getting more
Yeah.
volatile as we're getting towards the end here. We may be a few months out from the
Hmm.
end. Do you think there's going to be a full-on bear market in this environment, say with Bitcoin? Traditionally it's had its 4 year cycle, and then we
Hmm.
expect a bear market and so on and so forth. But we've got the institutions coming in, we've got the banks coming in, we've got, a very positive administration for this space. Do you see a less of a drawdown, a less of a bear market in,
Hmm.
in Bitcoin, or still could go down 70% type of scenario, like has usual been the usual sort
Yeah.
of thing?
I mean, I would say most likely not the 70% scenario just because of that constant bid from the ETFs, from government adoption.
Hmm.
I think our number one job as traders and investors right now is figuring out if the traditional 4 year cycle is going to continue or if things are potentially
Mm.
extending. So, gold, when the ETFs first launched, it went into an 8 year bull run.
Yeah.
And we just had the ETFs come on for Bitcoin in it was January 23, I
24.
think. Yeah.
Yep, somewhere around there.
Or was it 24? It's
About
all
18
blurring
months.
together now.
Yeah, about
Yeah.
18 months, I think.
Uh, yeah. Um, but if Q4 for the S&P 500 and NASDAQ can finish positive, all the historical indicators going into a post rate cutting cycle are pointing to another 18 to 24 months of positive price action. So
Right.
I'm using that as a bit of a gauge. There are a lot of cracks under the surface, just what we're seeing with housing, with
Mm.
sovereign debt, with consumer debt. I have friends who are mortgage brokers in Seattle, and they've already seen folks who unfortunately got laid off from their tech jobs who haven't adapted their lifestyle or adapted to, reduce their spending. They're borrowing against their homes to pay for their credit card bills, to pay for their auto loans. And it's just like, there are all these little things going on that you're like,
Yeah, cracks under
this
the
isn't healthy or
surface.
sustainable.
No.
But we also have liquidity coming in, and the market isn't the economy. So we can notice those cracks, but the market can still be running. It's
Mm.
just seeing when that turning point's going to come. And bringing it back to Bitcoin, if traditional markets continue to climb and we have, injections of liquidity persist from nations around the globe, it's hard to imagine an environment where Bitcoin would be going down at the same time that stocks are going up. And the way it's maybe a little bit of an oversimplification, but over the latter part of August and September, we saw gold climbing while
Yep.
equities were climbing,
Yeah.
which is generally indicating
Yeah,
a
that's not
flight to hard
unusual.
assets. So
Yep.
people are afraid of holding US dollars or,
Mm.
whatever their native currency
Any
is,
fiat currency. Mm.
any fiat currency. Now, since Friday, that's shifted a little bit. Gold has continued to climb, but equities have been selling off. So that's telling you that at least near term, things are shifting a little bit more risk off. Still a flight to hard assets, but risk off. So watching that mindset shift is very interesting. And, we haven't been in the kind of environment where people are just selling off and going into cash. But if we can see momentum pick back up in the next week or two for equities again, it seems like that risk on, market would continue
Yeah,
and
I'm sort
then,
of
yeah, trickle onto Bitcoin.
wondering if we've got a, really good fourth quarter coming up, maybe the next 3 to 9,
Mhm.
10 weeks, something like that. And then, whether it starts to shift
Yeah.
um, and then start to go down, or whether we've got another 6 months to run. That's the game I think we're
Yeah.
all playing, is when do we get out and when do we take
Yeah.
profits? And it's really
And
hard. The emotions of taking profits is quite hard. Like,
mhm.
it's actually quite hard to sell anything and to lock in some of
Mhm.
those wins. um,
Yeah, I want to say one thing on volatility, but you're right. But the more you trade short term or perp trading has really trained me to take profits because
hmm
there's always that fear of missing out of, oh, this
Yeah.
asset ran. But if you're looking at the indicators and what traditionally happens when something's overbought, I encourage people to adopt more of an abundance mindset with markets, meaning that there's always another opportunity. Even if the sector you have been trading isn't moving, look to the left and right. And there are things like right now, metals are outperforming, and
Yeah.
there are certain things you can pivot to. So it's better to just say, thank you for the gift the market gave you in that swing up, lock in some profits as opposed to riding it back down. And then seeing, okay, where's the next opportunity? Because this thing's overvalued. It's probably closer to the end of its run than the beginning. What is just starting that turnaround that I can move this over to?
Wow.
So just
That
that.
that's really gold, because it is about managing your emotions, isn't it?
Hmm.
To know when to get out and when to get in, and it's the hardest thing to do, is to not FOMO after something that's already, chasing candles that are, green
Yeah.
candles, um and knowing when to step out and step away into cash. But cash is devaluing, so you're like, how long do I
Yeah.
stay in cash? Like, it's all of these things that you're like got in the back of your head. But someone just said to me, a friend who's in the space yesterday, I just picture that every day that I'm locking in that profit that I've taken is going to bring me a 10x in the next bear cycle, at the bottom of the next bear,
Hmm.
when I'll be able to put it back in. And I'm like, yeah, that's a really good,
Yeah.
analogy
That's
to
a good
just
way of,
to picture it. So lock in some things, even though it might run another 20% or whatever the case may be, and you missed out on that, it's still
yeah.
better to
And
have locked some in.
And you don't have to nail the top. I think people get
No.
too hung up on that. But I really think of it just with each of these major market swings. We looked at the charts and the up and downs. If you can nail 60% of the middle and get within 20% of the peak and 20% of the bottom when it's turning around, you're doing better than 99.9% of traders. So,
That
just
that's the
take the, yeah,
magic.
take the chunk out of that wave. One thing I did want to mention on volatility before I forget.
Yep.
So we've seen more volatility this year, and I would just, if folks are just getting into the market, I think there is still opportunity, but it is marked by that volatility. So if you're not in, if you can be patient and wait for pullback periods like we might be experiencing right now, that's much safer. And looking to next year, traditionally markets see one bigger correction of 10 to 20%
hmm
and one smaller correction that's more the garden variety, like 3 to 5 or 3 to 8%. And
hmm
so we obviously had that big one in April with tariffs. We might be seeing
Yep.
that second one right now.
Mm.
But next year, looking at just some of the historical overlays, if you overlay our current price action to 1998 and the dot-com bubble, we're right about in that neighborhood, which would suggest still a little bit of time to run into that time in early 2000 where it burst. But next year, we could see two 10% plus corrections
Yep.
on the S&P 500. So I just want people to be ready. Also mentally, if they do get in at an
And
inopportune
it
moment,
drops. Yep.
yeah, early traders get hurt. There's everybody's situation is different, but I've seen so many people where they get in at the wrong moment, it drops and they sell, and then it runs back up, and
And
then
they're
they're
chasing
chasing at
it.
higher prices, and then they lost on both
Yeah.
ends of the equation.
Yeah,
So
it's so easy to do, and
yeah,
it's really logical to buy the lows and sell the tops, but it's very, very difficult to do. And if you're new, and the other thing I think is, as new investors, as new traders, you are going to pay your dues somewhere along the way,
mhm,
and you're going to make mistakes. And being to some degree okay with the learning, that's the price of learning. you're going to make things, you're not going to get 100% right from the get-go. If you go in with that mindset, you're probably not going to survive the first
Hmm.
wiggle woggle that happens. You're probably going to jump
Yeah.
right out of it and I lost 20% in a week. Oh my God, I'm out. And
Yeah.
you don't re-engage. If you can just, as someone who's made a few mistakes, um, it's been the biggest learning curve. And I think once you've been, I've heard people say like once you've sort of been through a number of cycles, like sort of the third cycle where you really start to hit your stride if you stay engaged with it.
Yeah.
And it's just been more and more challenging then to me to actually learn more, rather than to beat yourself up because you made a bad, choice at some point.
Hmm.
And understanding there are bad players out there, you've got to be very, very careful with your security and all of that sort of jazz. So that's the place to start, is actually, locking down your security if you're getting into crypto, especially in cold storage and
Hmm.
self-sovereignty. What is all of that about and how does that work, and doing that correctly. And just making sure you don't, get completely ripped by the bad actors out there, and then trying to
Yeah.
make the right decisions. But having said all that, you've made a life out of this. You've made
Hmm.
a job and a career. You're helping a lot of other people. Just before I let you go, Tom, because I've
Hmm.
taken up a ton of your time, but the WD GAN story, I've been sort of like
Hmm.
a little bit confused. How does that um, theory and that structure with the sort of 18.6 year cycle and the real
Hmm.
estate marry with the current situation, given that AI is a complete game changer?
Hmm.
And are we still going to have the same cycle though, within the housing
Hmm.
market? And because I think everybody's underestimating AI from a job loss perspective, from a disruption
Hmm.
perspective, and also the massive gains that are going to come from it and the abundance that might come out the other side, hopefully. So what's your take on marrying those two sort of different theses, if you like?
Yeah. No, yeah, it is interesting. And at the end, I did want to mention one thing about mentality and risk management. So maybe we can
Hmm.
put a little earmark in that.
Yep.
But with the cycles, all cycles will eventually break. The 18.6 year real estate cycle is looking at the last 150 years of market action. And roughly, if you average it out, every major correction has landed about 18.6 years on average and has been land led, meaning, not just land, but people's houses. That's where the majority of individuals' net worth is tied up. So when there's some crisis there, then it trickles over into markets and a bigger reset.
Hmm.
Then we also have a 100-year cycle landing right around
Yeah.
now. We have a
Yeah.
20-year
Yeah.
cycle. All these things are coming together, and that 100-year cycle reset, that might be, due based on all the things you mentioned on AI.
Yeah.
Um, so the I guess the reason cycles work, the reason charting works is because humans don't change. Even though
Mhm.
technology is changing, human emotion and the way we react to things and fear and greed. I mean, all we see on the charts with the price action is people getting overly greedy at the top, and then some big players start taking profits, and then folks get fearful and they start selling on the way down, and then smart players will step in, and then it runs back up and people get greedy. Oh, I'm missing it out, missing out on it.
Mhm.
It's just that
Just
playing
that
out on
psychology of it.
repeat. Yeah.
Yeah. Yeah. Yeah.
So I think the cycles should persist I mean, we obviously have to be open to things adapting. Like we're talking about, oh, is the Bitcoin 4 year cycle that's played out the last 12
Mm.
years, is that potentially going to shift? Because it most likely isn't going to last forever in the exact same fashion that we've seen over the last, decade and a half.
Yeah, yeah, yeah. And
So,
it's a maturing asset class, and it's still very new, pretty new. So
mhm.
the data that we have to go on is a pretty short-term data, really. And
Yeah.
so whether and now institutions and all of that coming in, it really is putting a bid underneath it, that's probably not going to
Mhm.
go below that certain level. You have one more thing that you want to say on the emotions side of
Oh,
it.
yeah. So, I mean, everything we've talked about, with the charting and trading, I always tell people that, well, two things I want to touch on. Mastering the charts, even though that feels overwhelming, it's really not that hard once you learn how to use the tools and how to read things. That can come pretty quickly. And it's about spotting repetition and patterns, and knowing when to get in and when to get out. It's mastering the human emotion side of things that is the most challenging. And some people have to work on that more than others, just based on your temperament and your personality. Um, and if you can figure that side out, trading might be for you. And also maybe adapt your style of trading. If you're very anxious or nervous, you probably don't want to be perp trading where you see, these massive swings. But also, if you're getting into it and you feel stressed about the swings in your portfolio and you can't sleep at night, you're probably risking too much of your overall net worth in too risky an asset. So if you're getting into
Wow,
it,
that's a good
don't
rule.
yeah, don't start all in altcoins, pick some things that are more stable and steady. And then with a smaller portion, you can explore out on the risk curve. But the last thing I want to see is, in an environment where everybody's trying to keep up with rising costs and how
Mm.
can I generate more
Yeah,
income, or how
yeah,
can I have my assets work for me, to try to chase gains too quickly and then get hurt by that.
yep. So don't be
Because it takes a
greedy.
long
Yeah.
time to gain that back. And going back to the beginning, what I said about this being a hard job, I don't mean that like, oh, woe is me, this is a hard job. There are many much harder jobs. Like I have a lot of flexibility. I can trade in the morning. I can go for a hike with my dogs. My
Mm.
life offers a certain level of freedom. What I mean by a hard job is that there's no other job that punishes you for bad performance. I mean, yes, you might lose your job, but if I'm wrong in a trade, not only am I not making money, money's being taken away from me. And that ties back to the emotional component. And, I won't get into exact figures, but between Friday and then the drop today, I've lost 2 years of my former salary in five
Yeah,
days in my
yeah, yeah,
portfolio.
yeah. And you
And so
have to be able to cope with
people,
that.
yeah, and put that in perspective. And markets, unfortunately, often take the elevator down and then the stairs back up, and so you get these sharper drops, and then, gosh, okay, do I have the endurance to see this through? But,
Yeah. And we
despite
do,
all that,
we do, and that's where the endurance mindset comes in, and the athlete mindset comes in. It's just like, I'll grind my way back up again and learn the lessons, and hopefully I'm get myself more educated and more better at doing it. And those are
hmm
usually the people that have wins in the end because they stick at it, you know.
yeah, yeah,
And you just
exactly.
gotta, yeah. I just look at those figures on my portfolios as just sometimes like monopoly money. Like I
hmm
don't emotionally attach to it when I've got a big win, and I don't, unless it's been like a thing that I've really mucked up. But it's generally it's just like, oh, it's up today, oh, it's down tomorrow. Oh well,
hmm
it's not lost until you lock it in either. Like
yeah,
I think especially with the long-term trading things, they're going up, they're going down. If Bitcoin turns into a bear market tomorrow, I'm not worried. Like,
hmm
okay, right, time to stack more. Is
yeah,
that is the sort of mindset. It's a little bit different when you're swing trading and you're trying to be in short term. And so that's why
hmm
working out what you are and what are good at and what you want to be, how much you want to dedicate to this is
yeah,
important conversations to have with yourself. But Tom, so Patreon, people can join you, they can learn
yep.
from you, they can give. So your Patreon, where do they go for that? They just go to the
Yeah.
Trading
So I'll give
Apologist,
you the
or
link, but it's patreon.com/tradingapologist. Or if you find me on YouTube, it's in the video descriptions. I did just cap the top tier, so there are like 40 seats left or so,
Mhm.
because I want that top tier to be more of a high
Really,
touch environment.
yeah.
But the idea with the Patreon is to help people in their investing journey. It's both trading focused and trading education focused. So I'm putting out weekly educational content. I'm posting my trade alerts. And then for that top tier, um, we have a chat, and then we do weekly calls
Wow.
where we go over the market prep. But I need to keep that small so I can
Yeah.
respond to everyone and give them
Yeah,
that
yeah, for sure.
attention. But there's still a lot of value even in those
In the
lower tiers.
lower tiers, yeah.
Yeah.
Yeah,
And
so
one thing
very
oh, sorry.
affordable. So it's very
Yeah.
affordable, people. So do, yeah, even in the
Yeah.
lower tiers, just to get you started on your journey, that would be a really good place to go.
Yeah, and it might not be a forever thing for folks, but my hope is that it can at least get them over those initial hurdles, get them comfortable with trading and investing. And then, maybe I actually hope that they outgrow it and they say, okay, I've got this figured out, and then they
Yeah.
can move on.
Yeah.
But the one thing I always encourage people in there to do, which is I think the most important discipline in trading, is focus. And I mean that on multiple fronts. We talked about assets. You don't want to be in every asset. You want to be focused to a few. In terms of the styles of trading, there are many styles of trading. I have one friend who just trades commodities futures. So he's like trading soybean futures and wheat and things like that. And he makes a great living at it. I don't
Wow.
touch that.
Yeah.
So there are multiple styles of trading. Find the ones that work for you. And then also on the technical analysis front, there are so many different indicators and tools. And there are some really good ones like MACD or others that I don't use personally. I'm not saying they're not good. It's just I found the
You
rhythm
found
that
your
works for
thing.
me.
Yeah.
Yeah. So
Yeah.
find those two or three things that work for you. And the best traders out there that I've met, they specialize and they sometimes just trade one or two chart patterns and they have them
Yeah.
down and they know exactly what to look for. This is my setup. This is what I'm trading. And I'm, like you said, with having the blinders on the
Yeah.
horse, it's like, this is my lane and I'm mastering this and sticking to it.
That's really good advice. And start with something more simple, say like a pair trading or a swing trading,
Hmm.
than going for the, leaps and options and perp
Yeah,
trading.
exactly.
Start with one thing, and that's there, and then master that, and then maybe you can look further afield when you get more confident.
Yeah. And
Oh,
you can
it's
explore
great.
other things. Like I did a class 2 weeks ago on futures trading just to see what it was all about. And I was like, this isn't for me. Uh,
Yeah.
so there's no harm in exploring, but figure out the things that work for you and you don't have to do everything.
Yeah, yeah, and that's really, really gold. Tom, you've been so generous with your time. Thank you so much for your wonderful teaching
You're welcome, Lisa. It was
style.
fun.
It was fun, and I think we're going to stay connected. And
Mhm.
yeah, I really appreciate you and what you're doing. So thank you for putting all this goodness out into the world. That's really great. That's empowering people. Thank you very much, Tom.
Oh, it's my pleasure. Thanks, Lisa.